Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies SOFI stock and how they could be reselling up to $1 billion worth of their Sofi stock. Then we're going to move on and go over why this particular financial reporter has a very high conviction in a particular stock that is down over 70%, and spoiler alert, it is Sofi Technologies, but I really like the evidence and the data that he uses to back up his high convictions about why he loves Sofi Technology stock. And of course, I also own Sofi Technology stock, but it doesn't make up more than 5% of my overall portfolio because to me, anything above that would be improper risk management, especially during the times we are in right now. And then lastly, we're going to be going over the top 5 investors who are betting big on Sofi Technology stock, and these particular investors own millions of Sofi shares. So despite the Sofi stock price falling so drastically lately, these giant players have sold off some Sofi stock, but the majority of their position is still completely intact because they believe that there is going to be a huge rebound for the SOFI stock. So with that being said, remember to go and smash that like button right now for more Sofi stock news videos. Subscribe if you are new, comment your thoughts down below about what you think of Sofi Technologies stock and the reverse stock split. And without further ado, let's jump right into today's stories. If you didn't know, Sofi Technologies is a fintech company or a financial technology company that offers a comprehensive all-in-one inclusive app that gives their customers anything they could probably need in terms of financial services and or financial products. They are basically a digital bank, and you can access anything that you could get through a regular bank completely electronically through the use of their app. Right now, the SOFI stock price is trading at around $6.33. However, investors and analysts and financial reporters such as myself think that the company should be worth at minimum $7 on the low end and $22 on the high end over the next 12 months. So this clearly indicates that the company is currently trading at a very good discount right now, and long-term growth investors may want to start picking up some shares of the stock. However, always make sure to do your own research because your portfolio and your investing goals could be different than mine. Sofi Technologies is in the spotlight for today's news video because the shares have actually increased by around 5% recently, despite shareholders giving their management the authority to potentially perform a reverse stock split over the next 12 months. Now, multiple investors and shareholders disagree on whether or not they want to actually implement a reverse stock split or not, but right now that choice is completely up to management because they have been given the authority to do so. I personally think they are going to do a 5-for-1 or a 10-for-1 reverse stock split, which means that the current stock price would either be worth around $30 per share or $60 per share, depending on the per share price after the split happens. However, I do want to point out that recently the company filed forms with the SEC, which is the U.S. Securities and Exchange Commission, to have a mixed shelf offering of around $1 billion. Now, I want to clarify that this is not Sofi Technologies issuing new stocks or new shares. This is where existing shareholders can resell their shares, and this would include the CEO, who is Anthony Nato, and the head of operations, both of which have bought up a lot of Sofi Technology stock over the last couple of months. And this is where shareholders may resell their shares, and this means shareholders as well as insiders will get to resell some of their shares at their own discretion. Sofi will not actually directly receive proceeds from the resale of their Sofi stock price. However, they will receive compensation if warrants are exercised and stock options are exercised. For instance, if all of their outstanding warrants are exercised, they're going to bring in around $108 million, and if all of their stock options are exercised, they will gain around $142 million. And the reason why the company is doing this is for quote-unquote general corporate purposes regarding working capital, acquisitions, retirement of debt, and other business opportunities. And for this reason, shareholders and investors are speculating that Sofi Technologies may be actually trying to build a larger cash pile to initiate another acquisition. Now, I want to push back on this slightly because if they decided to do another acquisition, I would like it for the long term. However, it might be too close to their previous acquisition of Technisys, which we will talk more about later. Now, the company's CEO, which is Nato, he actually says that right now Sofi Technologies is is very financially healthy and that they have an extremely durable business that will survive a bear market or even an economic recession. Now, with that being said, the CEO has continuously been buying up SoFi shares, and as of June 16th, he has around 3.56 million shares. However, because of this new reselling SEC filing, he could sell more than 2.85 million of his own common stock and around 22,581 warrants. So hopefully he does not exercise all of that. Now, I personally wouldn't care if he decided to exercise his warrants or even sell some shares, but I really hope he doesn't sell the majority of his shares, which I don't think will happen because I believe Anthony Nato really likes SoFi Technologies for the long term. And so does this financial reporter, who rightfully points out that over the past couple of years, the performance of SoFi Technologies as a business has been absolutely astounding. However, if we look at their stock chart, you wouldn't be able to see that. All you would be able to see is that the stock has fallen by around 74% from their highs, and that's really not good when you're looking at their stock chart. However, I like how this financial reporter correctly identifies that the company's business is actually stronger than it ever has been before, which is really good news. So despite the share price being cheaper at around $6 per share, the company is more healthy than ever before, and it deserves to go back to those all-time highs. The reason why SoFi Technologies and their stock price has been hit so hard lately is because the overall macroeconomic environment has been very unfair to financial companies, fintech companies, technology companies, and growth stocks. And SoFi Technologies just so happens to fit into all four of those categories. So the hit that they took was literally fourfold. And right now the company is in their high growth, low profitability phase. And this is really not good in a high interest rate environment, which we are in right now. However, despite this, I would say that SoFi Technologies is screaming to buy the stock right now, because if we compare them to other bank stocks, clearly SoFi Technologies is a good buy right now. After SoFi Technologies acquired Golden Pacific Bancorp for their bank charter, where now they can operate as a fully fledged bank, and they also have their Galileo platform, which is an API or an application programming interface, which allows other financial institutions such as Robinhood to open accounts, issue payment cards, or perform just about any other digital banking service. That's going to actually happen through Galileo, because Robinhood uses SoFi Technologies' Galileo platform, and many other financial institutions also use Galileo, which SoFi Technology owns. Another acquisition that they had besides Golden Pacific Bancorp and Galileo was their Technisys acquisition, which is a cloud-based banking platform that online banks use to manage loans, deposits, and other core functions, according to this article. And because SoFi Technologies has all of these acquisitions under their umbrella, this allows them to achieve extraordinarily high profit margins in ways that their competition cannot. And that's why I think eventually SoFi Technologies will truly be worth well above its current stock price. So if you are willing to buy the company now and hold it for the long term, this could really pay off for you. However, with that being said, please practice proper risk management and don't put all of your eggs in one basket, because if that egg breaks or SoFi Technologies doesn't work out, I don't want you to go bankrupt. Your portfolio or your basket of stocks, in my opinion, should be composed of multiple fantastic companies, not just one. Now, in my last video, I actually talked about how I like SoFi Technologies better than other companies such as Affirm and Upstart, and here's why. SoFi Technologies has fantastic in-house innovation capabilities, and instead of paying Fair Isaac for a 3-digit FICO credit score, which could be used in SoFi Technologies underwriting, SoFi Technologies has their own underwriting and their own algorithms to assess whether or not someone deserves a personal loan, an auto loan, or a mortgage. This is very similar to what Upstart does, but unlike Upstart, SoFi Technologies gets the full-fledged field view when a new member signs up and applies for a loan, because now SoFi Technologies, because of their flywheel business strategy, gets to wrap them in and sell sell other products to them, which is an absolutely amazing business model. You would think that the SOFI stock price would be trading at a premium right now. However, SoFi Technologies is only trading at 1.06 times their book value, which is literally right in line with the valuation of Bank of America and much lower than another financial institution such as JP Morgan Chase. However, there is no guarantee that SoFi Technologies will eventually become a leading US bank. However, with its rapid innovation, growing profit margins, innovative technology, and quickly scaling their revenues, I think that SoFi Technologies is going to outperform the market over the long term. And I'm not the only one that thinks that, because there are 5 other major investors that also think exactly what I'm thinking right now. And one of them is SoftBank, which is the largest shareholder of SoFi Technologies stock, because as of Q1, SoftBank owns around 95.28 million shares according to their 13F portfolio. Next up, we have Vanguard, which is the second largest holder of SoFi Technologies stock, with a position of around 50.86 million shares. In third place, we have Red Crow Capital, who owns around 42.64 million shares as of the third quarter of 2021. After them, we have Silver Lake Group, which is a very highly esteemed private equity firm that owns around 31.15 million shares of SoFi Technologies. And I also want to add that their vice chairman described SoFi Technologies as a business that they are rapidly transforming personal finance. Then lastly, we have another huge institution, which is T. Rowe Price, which is the 5th largest shareholder of SoFi Technologies stock with 29.26 million shares. Also, I'd like to bring to your attention that T. Rowe Price actually has a partnership with SoFi Technologies, and these are very large financial institutions that have gigantic positions in this company. So I am not alone in this. We are not alone in this. This company does have a good amount of institutional backing. And then for the final catalyst, and where I'm going to end the video today, is the student loan moratorium, which we have talked about a multitude of times on this channel. It's still currently set to stop on August 31st. So if that does not get extended, August 31st is going to be a huge catalyst for SoFi Technologies stock price. Because once the freeze on federal student loans stops and former students are going to have to start paying interest and paying on those loans, many people are going to try to refinance those loans at a cheaper interest rate, which is literally what SoFi Technologies is known for. That's how they got their start and their name in the market. So this could cause the share price to surge because student loan refinances actually accounted for around 29.6% of the company's origination volume during the first quarter. And when that student loan moratorium ends, it's going to put pressure on those former students to refinance those loans. But even if the student loan moratorium gets extended, the catalyst is still going to be there. It's just going to be a little further out. So either way, this is good news. I would love to hear your thoughts down below in the comments. Subscribe if you are new, smash that like button for more videos just like this one, and I will see you in the next YT video.